Hello, stock traders. I hope all of you had a great weekend and are ready to tackle this market. And in today's video, I'm going to talk a lot about the market, where I think that we're heading, some different levels to pay attention to now that Powell has laid out this plan for pain. It has become so important for you to know these different levels moving forward. But before I get going, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you haven't done so before, please subscribe and turn on those bell notifications so you get notified when a new video comes out. I'm also going to give out and talk about one of the insider callouts I'm going to do first thing on Monday morning, so you will want to stay till the end of the video. I think that the stock has a lot of power to it, and it appears that this insider really did a perfect job of buying the dip. So I'm going to go into detail on that, so you will want to stay till that time. Now, this last week in my callouts, this was a very tough week, but had an average gain per pick, which was really awesome, of 1.07%. Now, that is below average, but with the week that we had, I feel really good, especially following the insiders. The insiders are buying stocks aggressively this week. There were lots of Form 4s for me to go through, and I love that type of environment. I was personally 9 for 17 out of my callouts, which is 52.94% win rate. Way below normal of a 70% win rate. My average gain per pick is 3%. And this week only, Monday through Friday, going into the beginning of September, I am going to give out not only my call signals on my Twitter account, but I'm also going to give out my buy signals. So I am going to give my buy alerts this week. So if you want to follow and you're interested in these different alerts and want to see how this works in real time from our Patreon, you can do this for free by going to our description down below and following me at maltbie, following my Twitter handle, and I will give out my buy and sell alerts all this week for absolutely free. Now, if you like these alerts and you want them to continue, consider joining the Patreon group. That basic membership has all those insider alerts in there, and you can get those by just being a member, and it's only $27 a month, which I think by the end of the week you might find to be very valuable. All right, well, let's get into it. Let's start talking about this market and some different things going on. So yes, this is a very bearish candle here, breaking through all kinds of support levels and different things. So I have a red line in the sand, and this is really important, is this $400 level. That is something you're going to want to keep in mind this week. If the S&P 500 breaks below 400, we will be in for some possible pain. Why? Because I was tracking and thinking this was a 5-wave sequence to the upside. And it's still intact. The Elliott wave is still intact. The bullish Elliott wave is still intact. But if we get below this level right here, that violates a rule of the Elliott wave, and that will negate this entire thing. Instead, it would be an ABC correction up to the 200-day moving average, which is not good for the stock market, especially being rejected there over the last 2 weeks. This is not a very bullish chart at the moment. It's a chart with a lot of indecision. I would like to see us, kind of form a base here and stay above this lower gap right here at 402, and then see a bounce upwards in the market, maybe, an overreaction. Now, before Powell began to speak, there was a consumer inflationary report that came out, and it was actually very bullish. And so it was showing more easing of inflation pressures. And so that's why, this could be a mixed bag. There is a real bullish case right now for different things. We've retraced more than 50% of that bear market. And so typically when that happens, at least in the past, over the past 50 years, that has signaled the end of the bear market. But Powell's comments obviously spooked investors. I thought that was a little much, what he said. I expected more of the same, so I was a little surprised. But, hey, it is what it is. So we shall see if this levels out, and if the bulls come in and buy the dip. There's a lot of money on the sidelines here, and a lot of reasons why bears should worry about a squeeze. So those are still intact. Those are still some different things that are happening. But, you know, of course, this is very concerning. And so we will want to watch that. That line in the sand is really important. That $400 level, I will become very risk off if we break down below that level. It will become a thing where I have more and more cash on the sidelines waiting for the market to dip on the VIX. Now, I also want to talk about how the VIX has certain levels that it gets to that you will want to pay attention to. When the VIX hits 46, buy the dip. Buy the dip big time. And you thought I was going to rhyme it there, but it didn't. But when the VIX hits 46, it's very, very important to buy the dip. Now, right now we're at 25. So by no means are we there. If it should get to that level, expect the most gigantic bounce in the stock market because the VIX hits 46 or higher less than 0.1% of the time. And that is the level that I watch and have alerts for if that ever happens. That is all in. I'm putting all money in the stock market because we're about to have 100% gains from those levels if you pick the right stocks. And I've had a lot of success doing this back in 2020 when that happened, when the VIX hit 46. That was the signal for me to go all in, and man, did it work out for me. It was a crazy, amazing year. So that is another thing I kind of want you to kind of pay attention to. If we start to see a sell-off, when we see a waterfall of selling here, watch for that VIX. Become defensive, watch for that VIX to hit 46, and then buy the stocks that you like at that point, whether that be Apple, Tesla, whatever. They will all be super cheap, and it will be a great opportunity for us in the stock market. But we may not get there now that we've already retraced 50% of that. You know, it could go the other way. Okay, so let me start talking about this stock. I've been talking so much about the market, but let's get in here and start talking about it. And the stock I'm talking about today is Kennedy Wilson Holdings. And yeah, this does not look bullish at all. Of course, this looks very, very bearish. But we have an insider that on late on Friday bought the dip at $18.15. So right around there, almost timing the bottom. And they bought up about $600,000 worth of shares. It was a director buy. And I was just really impressed with the conviction on that. Now, some different things you're looking at here. The RSI hitting 30 and an insider loading up who's a director of the company who understands the ins and outs and is a managing partner of the company. That is a very bullish transaction. So since that's a bullish transaction, even though this is an extremely bearish chart, this gets me confidence to buy the dip on this on Monday morning. And I think that this stock will do well, and we're going to see a bounce here because the insider activity should raise some eyebrows to those who track those kind of things. I look at every single Form 4 every night, and I look for opportunities to buy stocks like this. And this is a very great opportunity to get in on that. Of course, the market could take this lower, you know, and I could not be successful in that trade. But I feel pretty confident when the RSI is at 30 and we have an insider buying a stock and buying so right at the bottom here. I feel very confident about going into it. I'm expecting this to be a big winner for me this next week. Well, I wish you all the best in the stock market. Please follow me on Twitter, and it will be a very interesting week. I will love to see you there. Looking forward to a fantastic week. Hopefully we see a bounce in the market. That's, of course, what I'm hoping for. Yes, I'm a bull, blah, blah, blah. I make the most money when the market is bullish, and I tend to break even when the market is bearish. All this year so far in 2022, I am just about break even. You know, so the insiders have always beat the market. I've always found that to be true. But, you know, I, of course, do want it to be bullish because I tend to have plus 100% gains in my portfolio when that happens by following the insiders. Following the vital few and ignoring the trivial many. I wish you all the best, and Raythoven out.